Paul Bloxham, who's the chief economist for Australia, New Zealand and global commodities at HSBC. Paul, this was your expectation as well. I think pretty much everybody's expectation that rates would remain unchanged. But what do you make of the commentary to give some colour on where the RBA might go from here?
I think the striking thing for me is that the commentary is so short that there's not much in the statement. Of course, we're going to get a press conference from the governor very soon and she'll get questions and we'll get a bit more detail. But I think that may very well summarise where they're at, which is we're making the sort of progress that the RBA had expected. So, the indicators we've seen since they last met have broadly been in line with what they had expected domestically. Growth has lifted a bit. The labour market is still tight with the unemployment rate steady, and inflation is moving gradually towards where they need it to be, as they pointed out, all sort of as they expected. And the big feature that's obviously in the middle of this statement is they're watching what's happening in the world. And so the global risks are the ones that are really front and centre. And so when you look at things like they're saying the board has options, they're saying we're watching the world. We have, and we don't know what exactly is going to happen in terms of global trade developments and what they're going to mean for Australia, but we've got options to deal with it because of where the economy's at. So obviously no intention today to have done anything. There really wasn't, there doesn't seem to be a discussion about that. They're in a reasonable place. The economy is fully employed and inflation's gradually heading back to target. Domestically, you might think that alone would give you, if the momentum continues to be the way it is, the RBA gets to gradually ease policy further and another rate cut coming at some point, obviously not today. But I think the real sort of underlying story is that they're watching what's happening in the global picture.
They most certainly are. While you've been speaking, Paul, I've been also just reading a little bit more about the commentary from the RBA, saying that the geopolitical uncertainties are pronounced and that the US tariff announcements are having an impact on confidence globally. What kind of impact do you think those tariffs will have on Australia? And even if it's through secondary economies like China, of course, which Australia largely depends on.
So I guess the first thing is it's going to be disruptive to the global picture, and we can see potential downside global risks, which is, for Australia is going to present some challenges too. We're tied into the global economy. But as we see it, at least, Australia is probably a little bit better placed than most perhaps. And that comes from something you've alluded to, which is we don't have a particularly strong direct trading relationship with the US. So only 4.5% of Australia's exports go directly to the US. So the direct impact of tariffs, if they were to arrive and be lifted, might be a bit smaller than for other countries. And of course, we're much more reliant on that indirect story. So what it means for the rest of Asia, and in particular, what it means for China. But even there, you might say to yourself, Australia's might be a little bit better placed than others. We're a big commodity exporter. And commodity markets, although they could weaken, of course, if you get trade barriers for your commodity sales into one market, you can then often redirect them more easily into other markets. And so, commodities are a bit more substitutable across different markets of the world. So we have if the global economy goes into a downswing, of course, that's important for us. But in terms of direct tariff effects, well, we substitute between markets perhaps a bit more easily than countries that have got manufacturing-based economies where their inputs are very specific to production processes. And so Australia might be just in a little bit better shape, might bear up a bit better than most in the face of rising trade barriers. Although I don't want to be too sanguine, it's obviously a risk, and it's something that we're watching.